Good afternoon, everyone. Welcome to Link's result briefing for first half financial year 2021-22. I'm Sylvia, General Manager of the Investor Relations team. Today, we are pleased to have our CEO, Mr. George Hongchoy, CFO, Mr. Kok Shen Ng, who is joining us from Shanghai, and CSO, Mr. Eric Yao, to give us an interim results update and management strategy going forward. During the course of the webcast, you may submit your questions on the webcast portal, and the questions will be conveyed to the management team during the Q&A session. Thank you, management, for the summary and the briefing. A kind reminder to the participants, please submit your questions to us via the webcast portal. Our first question comes from Mark Leung from UBS. It's regarding the Hong Kong retail. Management, can you give a Hong Kong retail rental reversion guidance for second half and also for next year? Management, please.
Sure. Thanks, Mark, for your question. The first half rental reversion is 3.something% in Hong Kong, which we are very encouraged with a positive reversion, given the rather difficult operating environment in the last 2 years in Hong Kong. As I have explained to many buy and sell side analysts in recent months, the leases that we are reverting right now with our typical 3-year lease tenor were leases that expired and negotiated in 2018-19, which was before COVID and before the social unrest period. So at that point, the lease terms were quite good and the rental levels were quite high. So to be able to still maintain a low single-digit reversion in the first half, we think it's already a pretty difficult feat. And we do expect the full year to be around the same level, to be low single-digit reversions at best. But so far we are encouraged by the level of occupancy that we see. Obviously at 97.5%, it's as high as we've ever had. But reversion-wise, it will be a bit tough to be any higher than that. And I do want to remind you that even though the average is 3-something%, behind that average is a huge range of very positive, strong, and to some very negative, weak reversions. But overall, all in all, we managed to achieve a very small positive reversion. And we expect that to last till the end of the year, financial year.
Thank you, management. The next question comes from Peter of Goldman Sachs. He would like to ask about the recent Hong Kong acquisition. So what is the rationale of acquiring the car park? And what is the MPI yield? Would it be similar to the gross yield? And also, is there any rental uplift potential given you will lease back to Zhongfu? Management, please.
We have continued to look at diversifying our portfolio. Hong Kong is our home base, so we're always very keen to look at any opportunities in Hong Kong. This particular acquisition is subject to a sale and leaseback arrangement. So there's very little management, property management cost for us because the entire building, both buildings are leased back to Zhongfu. So we think that this will allow us to carry quite a good margin from the initial yield with the funding that we are currently arranging. And there is a agreed annual increment to the lease to rent as well. Thank you.
Thank you, management. There is another related question from Raymond of CIMB. So he thinks this is a surprise for to see Link acquire Hong Kong assets, and also should we expect Link to buy more Hong Kong assets, and what kind of assets are we looking for? Management, please.
As I said, we are very keen on investing in Hong Kong to the extent that the opportunity makes sense for us. This is shouldn't be a surprise to you. This is our home, and we want to continue to invest more. We have put in a bid to try and get the Caroline Hill development site. We failed in that incident. We continue to look at other opportunity, whether they are completed operating assets or development opportunities. Our focus is obviously those few asset type that we already invested in, office, retail, etc. And now adding logistics warehouses to the asset mix. But if there are opportunities in Hong Kong, we always give it a priority.
Thank you, George. The next question comes from John from UBS, and is regarding our recent acquisition of logistics asset. So he wants to know who is the seller and who is the partner, and also who is going to manage the asset. And will Link acquire more logistics asset? If yes, what's the target percentage of logistics in our portfolio? Management, please.
KS?
If I could answer this in a way, starting from the partner, I think First Property is a significant player established almost a decade ago in the Guangdong area. And we got to know them, and we understood that they wanted to sell. And as we went through the duty meeting the team, we were very comfortable with who they are, the quality, as well as the underlying characteristics of the warehouses, as well as the leases. So we took 75% of them. They kept 25%. They remain as manager. And our hope and view is that we would like to partner them to do more, especially given that they have great access in terms of stakeholder relationships in the South. What is our allocation? I don't think we have set a level of what's that level. I think what we are trying to do here is to slowly enter into a sector that we have explored for a long time. At some point, it was a bit too pricey, and I think this is one of those deals that we feel comfortable with the place of where the assets are, comfortable with the partner, comfortable with the pricing, and comfortable with the product that we have reviewed. So I think it's still early days, it's beachhead, so just watch the space, and we hope to do more with this partner.
I'll supplement with 2 points. One is that we look at how we allocate our capital for inorganic growth without too much priority on any particular geography or asset type. We're really comparing different opportunities that are in front of us at any particular time and try to find the best investment. So as Kaya said, these two assets are fully let, giving us a very good yield. We have a good partner, and we have no development risk, no leasing risk, unlike some of the other opportunities in the logistic field. So it's a good start for us to learn and invest. We have also hired a number of people who have experience in this area, and we hope that as we build our own management capability, that we will continue to do more. But there's no particular percentage target at this stage.
Thank you, George. Thank you, KS. The other question comes from Peter from Goldman Sachs regarding the capital management. How would Link finance the recent 3 acquisitions, and what is the cost of that? Will Link consider asset disposal to finance the acquisitions? Management, please.
Yes, where's the money?
In Shanghai. We are funding the recent acquisitions all through gearing, through debt. And I think in the presentation we've articulated that post all the announced acquisitions, gearing will creep to just below the mid-20s. And I think on top of bonds, bank loans and all, clearly we have benefited from investor confidence in the dividend reinvestment scheme. And also clearly with the outlook being a bit more stable, we are comfortable that any valuation downside risk has been will be mitigated. I think disposal, leave it to George, but I think it's part and parcel of portfolio discipline. Force ranking, there will be always portfolios that it's time to refresh, and then we look for growth in capital gains in other new acquisitions.
There's no immediate plan for any disposal for our capital recycling. Currently, I think there are enough financing opportunities allowing us to fund these recent acquisitions.
Thank you, George. Thank you, KS. And the other question is also regarding capital management. So will Link consider formal share buyback program? Thank you.
Formal share buyback program. I mean, what I meant in my view as formal is that we are formally mandated to protect the share price, protect the share value in the event like last half year, where we see it trading down to a discount that we think is not relevant to the value that we think it is. So I think there is a formal understanding, management and board, that we have the ability to do buyback to protect the value. We are not announcing any formal allocation of funds, a pot, because in the past those were practices when we dispose assets with the gain, we were trying to return capital in a very formal way, whether it's through the special dividend or through buyback. Thank you.
Thank you, KS. The other question comes from Cousin of JP Morgan. It's regarding our strategy. So what do management think the growth composition going forward between organic and inorganic? And what's the target gearing after these acquisitions? Thank you.
Thank you, Cousin. The Vision 2025 target to grow our portfolio in high single digit is an overall target. There are times when we happen to be more active in acquisition, which obviously in the last few weeks we have been. So it would be more heavily weighted on the inorganic drivers to achieve Vision 2025. At times when the organic portfolio is difficult, such as over the last year and a half during COVID, then it may be less weighted on the organic part. I hate to say it's never going to be a linear parallel line between these two organic and inorganic drivers and happening all at the same time. There are times when, as for all acquisitions that Link has undertaken since we have done the first one in Hong Kong, Nan Fung Plaza in 2011, all acquisitions will be necessarily opportunistic. I guess what management, all of us here, are endeavoring to do is to ensure that when the right opportunity comes, we are well equipped to take it on. We will be doing our shareholders, our unit holders, a disfavor if a right deal comes, but either because we don't have the people to do it, or we don't have the capital to do it, or we don't have the capacity to do it. I guess we have been working very hard, as you can tell, with our inorganic growth drivers, completing, negotiating several deals all in one go, and announcing within the last 72 hours. But this is a testament to how we have been seeing and our commitment to deliver Vision 2025 to you as promised. So in summary, it's hard to say how it's split, because how that is split will differ from different periods and different times. But we look at that holistically as a goal, delivering both organic and inorganic growth to achieve Vision 2025, a high single-digit growth in our portfolio.
There is a question from Ken Yan about the target gearing after the recent acquisitions. Management, please.
There's no target. I mean, there's no target gearing after the announced acquisitions. We will be nearing to about 24-25% LTV, and then of course potentially with dividend reinvestment, you'll start to see things coming down again. And again, going down the road to valuation, hopefully we start to see valuation uptick and then gearing comes down. We don't really have a view on the sense of the target gearing. I think the target gearing is a feeling of that comfort and confidence. We feel internally when we look at how we have stacked our maturity profile, where are we in terms of our ISR and the outlook of our business. And then in terms of the confidence with the market as we engage the bond market, the bank markets, the credit agencies, I think so far we still see very strong support all the way to reverse inquiries on private placements. And as long as we remain a strong investment grade credit issuer, my sense is that we are comfortable at this mid-20s, stretching slightly towards 30. My sense is we are still able to manage our balance sheet.
Thank you, KS. Due to time constraint, we're going to take the last few questions. So the other question comes from Will from CIMB. It's about our asset allocation. So after the recent Hong Kong acquisition on car park, the Hong Kong portfolio allocation goes back to 78%. So do we still have our target of 60 to 70% on Hong Kong? And how to achieve this in 2025? Management, please.
That percentage in Hong Kong will naturally reduce as we add more from other countries. As the pie gets bigger, and if we don't add to Hong Kong, that percentage will drop, and that just will be done naturally. So that's basically it, and our guidance in terms of those percentage remain as we have reported.
Okay, thank you, George. And the other question comes from Kyle Choi of BAMO. So in more diversification moves, so what is the management's response to investors' concern that there is no clear functional or geographic focus, and that may lead to a valuation derating? Management, please.
Thank you, Carl. The intention to pursue Vision 2025 was announced and communicated, as you all know, several years ago. So this intention to look at different geographies, and we highlighted it's Hong Kong, mainland China, 4 first-tier cities, and the 4 overseas markets, as well as asset classes, not just retail, office, but also logistics. This is something that we have been communicating to the market. So we are, and we have been actively pursuing to act on it and progress on it. We believe, every time we enter something new, there's always the question about, do we have the expertise? Do we have the know-how to do it? And I guess we try to prove time and again that we do, and we will do it prudently, do it selectively, and given our status as a REIT, where the distribution to our unit holders are of prime importance, in addition to achieving Vision 2025. So how we have been adopting this expansion strategy, diversification strategy, whether it's through partnership, we identify good local partners, and to share in their expertise and to tap into their expertise. Do it in maybe a small, measured, secure manner. For instance, logistics, where we now acquire 2 small assets, fully leased, and with a great partner. And so, as we build up our expertise, as we build up our coverage, we will gradually grow and move towards Vision 2025. This has always been the Link strategy, and whether we entered into mainland China in 2015, whether we entered into the office space in 2015, whether we entered into development again in 2015, and now, and of course, overseas in Australia and UK as well. So we haven't really departed much from it, but it's just a continuation of the strategy.
I'll just supplement by perhaps running through what we have done in China when we acquire one asset at a time. We insource the team that has been running those assets for some time into part of the Link team. Only a year and a half, 2 years ago, when we started to see a critical mass building up, we decided to set up the China head office in Shanghai. Now KS is operating from there these few months. And then we built the management structure there. We've hired local people. So apart from the asset management team, we now have accountant, lawyers, project team members, etc. in our Shanghai head office. And with the expanding critical mass, we are going to make sure that we have the system to monitor, to manage these assets locally, but also from head office, we have a clear line of sight. We will do the same in other countries when there is a critical mass. In new asset type, we have, when we got into office in Hong Kong, work with Nanfeng, but also hire people who know office leasing. With logistics, as I mentioned, apart from the partner that will help us to manage the two assets, we have hired senior people to join our team based in Shanghai to help us to look for new assets and to do the underwriting and then management afterwards. In Australia, with now 4 assets and the plan to continue to look for more as we look at all the different other markets. You wouldn't be surprised that just in the last few days after the announcement, how many people through LinkedIn or email contacted us about joining us, and you'll probably see some hiring to build our team in Australia at some point, and then we'll do the same in other places. So the expertise are growing, but we are quite prudent in doing that. We don't want to do it too early in advance. It's always a chicken and egg situation that we're trying to manage. But so far, I think China is a good example to see how we have steadily built up that platform so that we can manage the assets properly.
Thank you, George. Thank you, Eric. So here comes to our last question. Does management think growth from the Hong Kong recovery and also the recent acquisitions can more than offset the absence of the discretionary distribution in next financial year? Or we should see a sharp deceleration in DPU growth? Management, please.
Yes.
I think we are confident that we are not going to break the record with the acquisitions, and I think in a way, where we are standing here, I think Hong Kong has indeed come out and bottomed out in terms of the darker days in the past 2 to 3 years. I don't have more to add, otherwise I think Eric will take exception to giving forecasts.
We are obviously adding in organically to help. Then China and Hong Kong's doing reasonably well.
Thank you, management, for answering all these questions. And if you have further questions, please feel free to reach out to our team. And thanks a lot for joining us today, and thanks for your support. We do hope to meet you soon. Thank you and goodbye.
Thank you very much.
Bye.